What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner, and today is Monday, so it is Fundamentals Report Day, my free weekly newsletter that comes out every Monday, and then we read through it here on the show. So let me share my screen and jump right into it. Bitcoinandmarkets.com. That's where you go to sign up to be a free member and get the weekly newsletter. There's also other ways to support the show there and higher level member content. Also, check out bmpro.substack.com. A bunch of good stuff coming out, 3, 4, 5 times a week over there on Bitcoin Magazine Pro. Okay, let's jump right into the Bitcoin Fundamentals Report number 289. I've been doing this for a long time, and I've never sold a scam, never lost people money. I've had some bad calls on the Bitcoin price throughout that 5 years or whatever it is, but I've never sold a scam to people where they had a rug pulled on them or anything like that. And producing this content for such a long time without taking ads from all these scammers, it's been a long, tough slog, but I think the information that you get here from Bitcoin and Markets is second to none, really. And you'll see that as we go through this newsletter. This is the weekly format that I use. I talk about the headlines for Bitcoin and macro. I talk about the price, talk about the mining sector, and layer 2 stuff. So cover the entire broad sweep of the market. Okay, let's get started. So the first thing I have on here is cover image. It used to be a meme, but I've been working with Midjourney and ChatGPT and learning how to make some images and stuff. So I've started doing my cover images as this. I did see another good meme today, shared it with Telegram, and it was of a bird sitting on a windowsill outside of the cage, and it said BTC, and then a bird sitting inside in a cage, and it said BTC in the ETF, and I thought it was a very good meme. Anyways, let's continue down. Oh, I forgot to update the block number. Quick access for different sections. Okay, snapshot of Bitcoin. Weekly trend. We are so back. Finally had a breakout of the 50-day moving average, back tested that 50-day moving average, and now we're exploding higher. I saw it cross 70,000 before I started recording here. Media sentiment is positive because of all of the 13F filings, as well as the legislation that's been going through Congress. And so I think the media sentiment is very, very positive right now. Network traffic is low. We'll take a look at the mempool and fees and all that stuff. Mining industry is still adjusting post-halving. I cover that extensively on bmpro.substack.com, so you guys can check that out. Weekly price. So since last Monday, the price has increased by $6,000, almost 10%, up to 68,801 at the time of writing. And just like I said, it's gone over 70,000 now. I'm going to increase that for Telegram. Okay, market cap. That brings the market cap to 1.35 trillion. Satoshis per dollar, 14.53. One Finny, my preferred denomination of Bitcoin, is $6.88. Mining sector, previous difficulty adjustment was a negative 5%. That was the biggest one in a couple years. But our next estimated adjustment is in 2 days, and right now it's trending toward being a 1% difficulty increase. Mempool is under 200 megabytes for the first time in a long time, down to 174 megabytes at the time of writing. Fees for the next block, $1.06, guys. 7 sats per virtual byte. I mean, they haven't been this low in a very long time. Low priority fee is under $1, 87 cents. All right, Lightning Network. Both the capacity and channels had a small decline this week. I hope that's not, resuming their downward trajectory that they've had. Last couple times we've looked at these, they were increasing. So now they both decreased this week, but only a small amount. I mean, capacity went down by 13 Bitcoins, and only 73 channels net closed net on the week. So that's small declines. Okay, in case you missed it, these are all my Bitcoin Magazine Pro articles of the last week. Remember, I did put out a premium update for premium members on the website. And I put out a blog post this morning discussing reserves, sources, utility, and why QE doesn't work. And I haven't made that available to free members yet, but I'll probably do that this evening. I'd like to get it out to paid members that support the show first, and then 24 or 48 hours later, put it out for the general public. All right, let's get into the headlines. So ETF flows rise dramatically after 13F filings. So we had a couple weeks of negative flows, and last week was a big one for inflows. Just as I predicted, the wave of 13F filings have stimulated further demand. So if we take a look at this little spreadsheet that I've been keeping, you can see last week was all positive. And the average, average daily inflow since the launch of the ETFs is still above $100 million a day. So even with all of these negative outflow days, the total or the average inflow for trading day into the Bitcoin ETFs is, I think it was 130 million still, 130 million per day on average. But yeah, last week was a positive week right after those 13Fs. And I said the 13Fs are going to come out. Half of the top hedge funds are owning Bitcoin now, and it's just going to stimulate further demand. Some like Millennium, the Millennium hedge fund, I can't remember the exact name of it, but they invested 3% of their assets under management into Bitcoin. That's huge. The state of Wisconsin invested a 0.5%. But, when Bitcoin doubles here in the next little while, it's going to be a 1% allocation of their pension fund for the state of Wisconsin. So, yeah, these are big players coming in, and they're just going to stimulate other big players to dip their toes in as well. And that's what we're kind of seeing this week or last week on the ETF flows. And I didn't check for today. Has anything come out today yet? Let me see. Oh, I have to minimize that. Check this out. Okay. Well, GBTC has reported a $9 million inflow. So it's probably going to be another positive day. Most of the other guys have not reported yet. So there you go. That's that. Oh, man, I have too many windows opened up. Okay, next topic is CME to offer spot Bitcoin trading. And I ran across this morning when I was searching for the biggest topics of the week. And this is a pretty big deal. So Chicago Mercantile Exchange, the CME, the world's largest futures exchange, is planning to offer spot Bitcoin trading on its platform, according to a Financial Times report. This move would provide major hedge funds and institutional traders with a regulated venue to trade Bitcoin. CME is already the global leader in Bitcoin futures trading. By adding spot Bitcoin, it can offer clients an integrated platform that includes both spot and derivatives markets. It's a huge deal. This enables complex trading strategies like arbitrage and basis trading that leverage price differences between the two. Currently, most spot Bitcoin trading occurs on offshore exchanges like Binance. And I'm surprised at how big it still is. I mean, Binance, like I use the liquidation heat map, and you'll see that down below here when we talk about price. Their volume is like 10 times other volume, and it's pretty lopsided. So Binance is still the biggest spot Bitcoin trading exchange. Providing a regulated alternative targets institutional investors who require strict due diligence and compliance standards. The exchange has reportedly held talks with traders expressing strong interest in trading Bitcoin in a regulated environment. And a lot of people probably look at this. A lot of Bitcoiners are the crypto anarchists, and anarchists or even just libertarians will look at this and be like, why does this have to be a regulated environment? Well, I agree that these big traders, big pools of capital, are not going to trade on Binance. They just won't do it. There's not enough protection for them, because yes, every exchange can fail. Even, like the New York Stock Exchange has circuit breakers. There's failures that can happen. Okay. But there is a regulatory framework around that so that their overall risk is controllable. Where if they trade on Binance, they can get rug pulled at any time. So they're not going to do that. They have to be within a umbrella of a regulated environment that has clear, liability clauses, clear risk. I don't know. Just everything is clear the way that what word am I looking for? Ownership. Like if something happens, who is the owner of those things? Like when if Binance will get hacked, they might socialize the losses, but they can't do that necessarily on, like the New York Stock Exchange. You have allocated very clear ownership rights, okay, and you don't have that with something like Binance, or Mt. Gox or whatever the case is, Bitfinex. So anyway, let's go to the next topic. Chinese police bust $1.9 billion Tether underground banking racket. And this is from Cointelegraph. Chinese police have unearthed a $1.9 billion underground banking racket involving the popular stablecoin Tether. The underground banking operations operated in the Chinese city of Chengdu, where the Tether stablecoin was used to exchange foreign currencies. The city police issued a media report highlighting the details of the underground operations. It said that they have arrested 193 suspects across 26 provinces. The police report noted that the underground Tether banking operations began in January of 2021 and were primarily used to smuggle medicine, cosmetics, and investment assets overseas. The authorities destroyed 2 underground operations in Fujian and Hunan, and the police also froze 149 million yuan, worth about $20 million, linked to Tether banking operations. Despite a comprehensive prohibition on crypto-related activities in China, Chinese traders persist in circumventing the national ban and utilizing Bitcoin-like assets in alternative ways. A report published by Kairos Ventures indicates that Chinese traders are among the largest stablecoin holders worldwide. And this surprised me. The largest stablecoin holders worldwide, when it's like illegal. It's amazing. The report shows that 33% of Chinese investors sold several stablecoin or hold several stablecoins, ranking them second only to Vietnam's 58%. 33%. Somehow they're finding ways to invest to hold these stable coins. A third of all Chinese. And if you think about it, a third of Chinese are really too old to get into this type of technology, these stable coins, and probably a third are too poor. They don't have enough capital to really put into these things. So pretty much every eligible person over there has stable coins that has access and has money enough to do it. That's pretty amazing. All right, let's move on. Macro headlines. CPI below forecast. May looks like it will be near zero. So headline CPI for April came in at 0.3% month over month, and we reacted to that live here on the show, under the 0.4% consensus forecast. Next month is expected to be much lower, with current estimates at 0.1%. And the base effect for this, so the year over year is simply the 12 months added up. And so the May of 2023 that's falling off was also 0.1. So if May of 2024 comes in above 0.1, it will raise the year over year rate, even though that's fairly low for a month over month. But then when we get into July and August and September, those were much higher. I think August 2023 month over month CPI was 0.5%. So that's significant. And we could start seeing, numbers coming in at 0.1, 0.1 again over consecutive months here. We're going to see a large drop in the year over year number. So anyway, however, if the Atlanta Fed's inflation nowcast is off by as much as it was in April, May's CPI could reach 0.0% month over month. Slowing of price rises is a sign that we are getting closer to recession because recessions are deflationary. But here we go. So this was the estimate up here. Can I make that bigger? It's not bigger, but so up here was the estimate 0.41 actually they had, but it came in at 0.31. So they missed it by a whole 0.1%. And if they do that again in May, it'll go from 0.1 to 0. So we'll see how that turns out. And let me just clarify this last sentence again. Slowing of price rises is a sign that we are getting closer to recession, because as think about, if there's less economic activity and there's less demand because people are struggling, they're going to consume less, and then people will either not raise their prices or start lowering some prices just to sell something. And you'll see this in the inventory cycle. You'll see this with recession cycle. And so as in the lead up to a recession, we should expect CPI numbers to be flat or starting to go down, starting even getting into negative territory in some months. I have been expecting some negative prints this year. We haven't had them yet, but we'll see how that goes. All right, next topic. Heads of state are under attack. Last Wednesday, May 15th, Slovakian Prime Minister Robert Fico was shot several times and remains in critical condition. Doctors now say he is likely to recover and is awake after emergency surgery. Slovakia has been against the war in Ukraine and very recently rejected the new WHO treaty that would cede sovereignty to the WHO in a pandemic. Okay, so that was a big one. Conservative type, populist type, against the war in Ukraine and against the WHO, the big globalist push here. So pretty big coincidence that he gets has an assassination attempt. But okay, what about the Iranian president? So you guys probably all heard that he died in a helicopter crash. I read another headline a little bit later that said the Iranians are blaming the sanctions because it was due to equipment malfunction on the helicopter. And if they wouldn't be under sanctions, they would have had better maintenance. They would have had better access to different parts and things. And so they're blaming the sanctions for the death. And that makes me think that it's not like an outright some sort of attack. I mean, it could have been sabotage maybe, but they first reported as a hard landing. It appears the helicopter crashed and fully burned, killing everyone on board. The president and his delegation was returning from a trip to the Azerbaijan border. Travel is not without risk, but anytime a political leader dies in a plane crash or a helicopter crash, it is very suspicious. But another important date that is today for a head of state is actually Zelensky's last legal day as president of Ukraine. He has suspended elections to protect democracy, of course. But yeah, this is his last legal day in office. All right, moving on to price analysis. Before I do that, let me check the chat and see if there's anybody chatting up here. Dex Invictus, Raphael. How do you see a path for Bitcoin backing the US dollar? I've heard you tease that out. Would like for you to elaborate somewhat. Um, okay, so Bitcoin backing the dollar. First off, a lot of people don't think that it's possible. Okay, and if you ask people like Jeff Schneider about it, or really most mainstream or I would say most mainstream economists or financial advisors or whatever, and you bring that up, they will laugh you out of the room. But it's a fact that the dollar has been many things. Okay, the dollar has been uh, gold, it's been silver, it's been a bimetal standard, it's been pure fiat in the past. There have been fiat experiments, all the way in different areas in different states even. If you go back to colonial times, then there's a lot of experiments with pure fiat. And now then there was the Bretton Woods, right? They debased it from 20 to $35 an ounce. Then it was Bretton Woods, where everyone was pegged to the dollar, and then 1971 we went off the gold peg. So it's changed. It's like, I don't know what the average would be, but the average is something like 30 years where the dollar is stable with what is backing it, or um, the monetary system around it. I bet it changes every 30 to 40 years, and it can just change again. One way that they would do it is they would revalue, and this comes from Jim Rickards uh, in his books, like from 20, 30 years ago that I read. I guess it would be, 20 to 25 years ago. For a gold standard, he was like, they would just revalue gold. So instead of saying that gold was $1,000 an ounce at the time on the free market, they would say gold is $10,000 an ounce, and that would be a devaluation of the dollar, and but it would also be a huge appreciation for an ounce of gold. Well, they could do a similar thing with Bitcoin. They would just have to buy the Bitcoin, right? They would have to buy it and then revalue the dollar in terms of Bitcoin, whether that's 1 sat per dollar or 10 sats per dollar. They would have to set an exchange rate for that. So yeah, that's how they would do it. And I mean, we would be able to see it probably coming, and we're starting to see the very first stages of this, where we have El Salvador, we have other countries mining. The large banks are starting to own a portion of this in their reserves. So there is the very starts of this. And once that happens, I mean, yeah, Bitcoin is going to go to the moon like crazy. But anyway, that's my thoughts on that. I haven't really done a detailed dive on it. Dex Invictus, no elections is so bullish for democracy. Yeah. Yeah, they had to protect democracy by canceling the elections. I mean, it's the same thing kind of going on here in the United States, where they have to take one of the people off the ballot to protect democracy. I mean, it's just complete and utter hypocrisy and gaslighting, and people are seeing through it. People obviously are seeing through it. So anyway, okay, let's get on with the price here. And actually, before I do that, just in case, I'm going to check Telegram. You guys usually don't have many comments over there, but okay, nothing. I'm not seeing anything. Okay. So the Bitcoin charts price section. First off, you guys can get the protons. I put out these Bitcoin market protons. That's the premium stuff, full of tons of different charts. I have a short-term, long-term, and short-term, medium-term, and cycle forecast. And that comes out on each issue that I do. But I don't, that's where all my official forecasting happens. So the stuff on here, I'm just going over the price, putting a few charts out there, and yeah, updating you guys on what's going on. Because a lot of people, in Bitcoin, they say price is like the least interesting thing, which I don't think. I think price is the most important thing for Bitcoin, but there are those people out there like that. So I don't go too deep into the price here on the newsletter. That's on my premium stuff. But okay, last week, I said once we break the 50-day moving average, price should rapidly hit 68. That will be the true resistance, in my opinion. If price can make it to 70,000, price movements could be explosive. 78,000, sorry, did I say 78? 70,000. 78,000 by next week is not out of the question if we break 68 this week. So I was talking about that last week. So last week, price did not break. Oh man, I said 69. I'm getting this mixed up. Price did not break the 68 that I was talking about. But we are breaking at the time of writing. All-time high resistance is the next level to watch for, but it is possible for price to slash right through it, heading up to the next round number resistance at 80. So here is a chart, all-time high resistance here, breaking up. And let's go take a look at the live chart instead. So, okay. Right now, 69,799. Like I said, it did break 70,000. We're edging up towards this all-time high resistance. All right, back to the newsletter. So if this move is 90% like the last two rallies have been, that would take price to 110K. So all I did was I looked at this rise. It was 95%, okay, from 24 up to 49-ish or whatever that would be. That was 95%. Then this move right after the ETFs were launched went from 38 up to 69 or 72 or whatever that was. And that was also a 92% jump. So if we go up 90% again, third time this year, that would be over 100,000 per Bitcoin. Okay. I wanted to bring this heat map back because last week I said the heat map is still favoring a cascade up to 68,000. We got our cascade up to 68,000 with shorts getting taken to the cleaners each time. This is very visible on the 1 week chart 2 below. That might have exhausted the shorts for the time being. So let me just go to this one. This is the 1 week total. So 1 week from left to right. And you can see that each time we went up, there formed this kind of resistance. So somebody must have been opening up some major high leverage longs. They were going 100x or something crazy. And then they would get liquidated because this is a heat map of the liquidation levels. Then it broke up through that and they re-put on another short. And then they broke through that. Didn't quite get to these liquidated longs down here, but then they started adding some more over here very far right, and you can see we liquidated that as well. So that's a cascade up. Each time for a short to get liquidated, they have to buy Bitcoin, right? And so that's what we're talking about there. Now, if we go to the 3 month, you can kind of see what I was talking about. So if we go back last week, back here to this level, I was saying that we could go through this, that would shoot price up to here, we'd liquidate that, and then that would cascade us up to 68,000. That's what I was looking at last week. And that's pretty much what has happened. There's a long way down with not very much to liquidate. Like looking at this chart, where's the most liquidity on this chart? It's up at the all-time highs. So we could go to the all-time highs and just tear right through it. All right. So that's that. Derivatives markets have surprisingly shifted bearish with perpetual funding rates coming down, meaning there is a better balance of short and long interest. So let's look at this. This is from our market post on Bitcoin Magazine Pro, but you can see the perps funding rate here up top. 7 days ago, it was 5%. So that, these perps, these perpetual futures contracts, the way that they attract balancing out of demand for longs and shorts is they make one side pay a funding fee to the other side. So if the market is really bullish, not very many people are going to want to short. So what they do is they make the long people that want to go long, they have to pay people to go short. And at this point, it was 5%, which isn't huge. Actually, I've seen it up at like 15, 20%, but that's significant, 5%. And it's gone down. So that means that there has been less long interest relative to short interest for that to come down. All right. The other thing I was looking at is this options 25 delta skew. When that's negative, that's the options traders are more pessimistic. So negative is pessimistic, positive is optimistic for price. So they are doing more downside hedging right now in the options markets. That's why it's pushing this down more negative. Now, they could be pessimistic. I say perhaps they are, or perhaps this could be because they are taking long spot positions. So they can do this. Like if you're going to open up a position and just go like 1x or 2x long in a futures position or something, then you go back on the backside and you go short a short hedge in the options. You might use more leverage or whatever and have a smaller trade, but that would be downside protection in the options market where it's long protection or long position in a futures or spot. So that could be happening. But right now there is a premium on downside protection for price. Overall, price has broken out of its 10-week consolidation pattern, and we are eyeing all-time highs again, which I think could come this week. I say it often that the gains in this market will happen relatively quickly and catch fence sitters off guard. All right, so that's the price section. Let's go on to mining news. Before I do that, let me check the comments, see if there's any other ones here. Raphael says, if the U.S. has to buy the Bitcoin, how much Bitcoin would you think they need to leave to implement such a move, or they need to have? Oh, man, a lot. I mean, at least what MicroStrategy has, if not double that. So MicroStrategy has just over 1%. I mean, you would think the goal of the U.S. would be 5% of the total supply. That's a lot, I know. But they can build up to that too, because they can tax. So they can raise the Bitcoin through taxation. And that's why I do think that one of my thoughts about how they would implement this, I forgot about this, was they could put a capital gains tax on Bitcoin specifically, like 50%, And so if the price of Bitcoin would go up to 10 million, but then you owe a 50% capital gains on it. Something like that, right? In that world, it's I don't know. I don't know how to describe it, but like, would you be okay with a $10 million Bitcoin, but you had to pay a 50% capital gains? I think most Bitcoiners would not like that, but they would deal with it. $10 million Bitcoin. I mean, so that's how they're going to get a lot of it too, is they're going to tax it in special ways, most likely. So yeah. All right, back to The newsletter. So, mining headlines. Venezuela bans Bitcoin mining. Not particularly surprising or important news for the hash rate, but it is interesting because of the totally mixed signals. When I read this, I was just like, wow, this government, man, these authoritarians down there, they are completely mixed up. So they are banning mining, but they're increasing their use of Bitcoin and or Tether for the oil trade to route around sanctions. So they're banning mining, but they're increasing their use of Bitcoin and Tether. I mean, it's totally mixed up. Okay, from the article, Venezuela's government has announced it will ban Bitcoin mining and seize 11,000 ASICs used to mine. Okay, if you guys are new to watching my stuff, every time I read a quote and it has this word or this word in it, I try not to say it. So it takes me a while. I get tripped up on some of these things because I just have a pet peeve for the term cryptocurrency. I don't think Bitcoin is a currency. I think Bitcoin is money. There's a difference. There's a difference between the dollar and gold. There's a difference between PayPal and the dollars that PayPal transacts in. So Bitcoin is not a currency. Bitcoin is money. And Satoshi, I think, only said this term once, and it was years. It was like 2 years after he launched it and everything, and I think he just used it because someone else used it. But this is not like a term from Satoshi or anything. It's the same type of term as altcoin. So altcoin is just an affinity scam. You know, it's trying to be like Bitcoin or say that it's like Bitcoin so that it can confer some value, even though they're all scams. So cryptocurrency is just an altcoiner term. It's an affinity scam on Bitcoin. But anyway, back to Venezuela and banning mining. The statement also said the government had disconnected a number of Bitcoin mines as it sought to, quote, disconnect all Bitcoin mining farms in the country from the electrical system, avoiding the high impact on demand. Okay. That's not very many. I mean, 11,000 rigs, I guess that's like a medium-sized shop in the United States, right? Venezuela, despite its oil wealth, has trouble with reliable electricity supply amid years of U.S. sanctions and mismanagement. Oh, imagine that. Blackouts in Venezuela are a frequent occurrence, which has made Bitcoin even more problematic. Okay. Yet at the same time, the country's government is very much in favor of Bitcoin. State-owned PDVSA. So what would that be? Police department? I don't know. Uses them for its international oil trade. Oh, petroleum division, Venezuela, something like that. Avoid sanctions action by Washington. Last year, the use of Bitcoin was at the center of a corruption investigation. Some $21 billion in unaccounted receivables. 21. Venezuela go. Okay, so this is crazy. They are banning Bitcoin mining, but at the same time using it more. It's just silly. Bitcoin mining costs drop to 45,000 as inefficient miners exit. Oh, let me try reading that again. Bitcoin mining costs drops to 45,000 as inefficient miners exit JP Morgan. Current hash rate and power consumption on the Bitcoin network implies an estimated mining cost of about 45,000, down from above 50,000, JP Morgan said in their research report. Well, in a lot of the things that I read for Bitcoin Magazine Pro's mining tracker stuff is the cost to mine a Bitcoin. And I remember reading specifically Northern Data, who it's a Canadian firm miner. I think they mine at $16,000 per Bitcoin. I think that's what they say the cost is. It's about 16,000. But now that the reward is cut in half, I mean that might be up to 30,000. But still, that's significantly lower than this estimate. I think most of the big miners can mine for probably around 30,000 right now. $30,000 per Bitcoin. All right. Hash rate and difficulty. Did I not update this? I did not update this verbiage. Let's just look at the images. Sorry about that, guys. So the hash rate, this is the 7-day moving average. It is down, even though the difficulty adjustment is estimated to be higher by 1%. This looks like the average hash rate is still falling slightly on the Bitcoin network. Mempool. Mempool is down dramatically. Like we said, the fees were right around $1 to get in the next block, which is unbelievable. But all of that traffic from the halving period is now pretty much eaten through. All right, how about the layer 2 protocols? I say, will runes and inscriptions bounce back with a price breakout? So, I'm saying that these things, runes and inscriptions and ordinals and stuff, they are a measure of speculative interest in Bitcoin. And so as the price is rising, we should also expect the volume of these things to rise as well. But you can see on this image here, they haven't really bounced back all that much. Of course, runes is still the dominant protocol. And here is the inscription / ordinals. Still pretty much nothing down there. All right. So a new wave of Bitcoin layer 2s are side chains. And if you guys have been listening to me for a while, you know that I think probably the next wave of layer 2s is going to be side chains based. I'd like to see them like elements based, which is the Liquid, whatever Liquid runs on is Elements side chain. And you can launch your own Element side chain and have your own federation of block producers. But yeah, so this was an interesting article that caught my eye here. It was released this morning. So Bitcoin's layer 2s are the hottest thing on the street. People are using a bunch of jargon to distract users from trust assumptions and shill Bitcoin season 2. Why all the sudden energy? See, about a year ago, some teams figured out how to use Bitcoin as a data availability layer for rollups. Others have been working on improving trust assumptions related to bridges, aka two-way pegs. The research has been making great progress, and a lot of projects think we will have rollup-like blockchains in production in 2025. So that's a lot of jargon. Pretty much they're experimenting a lot on these types of things: bridges, two-way pegs, roll-ups. And that's what I have kind of said recently. I know I've written about it a lot on Bitcoin Magazine Pro, where this is where all of the energy is. And like it or not, this is going to happen, and that it's could have a very beneficial outcome because they could stumble across something great just by accident, in all of their research and all of their thinking about this, maybe they stumble across something very, really great, and we all get to benefit from that. So this is where all of the innovation is happening. And like it or not, yes, there's trust trade-offs, of course, trust assumptions and trust trade-offs, but it's going to happen, okay? And there is a lot of innovation happening right now. All the new Bitcoin layer 2s are just modular sidechains. And when I say modular sidechain, I mean they run an alternative blockchain off of their parent blockchain for performance purposes. So this is just like any sidechain, like Liquid. It's a blockchain completely separate, but what differentiates it from a, say, altcoin scam is the monetary unit. So its native token is pegged to Bitcoin. That's what makes it not a scam. It doesn't have a separate floating token that perverts incentives. It uses the monetary token of Bitcoin. And so, yes, it's an alternative blockchain, but it's an alternative blockchain that uses the parent unit, the parent currency, but not currency, the parent money token. All right. They also make security trade-offs by using an alternative data availability layer for improved performance. You might read this post and think the entire situation has gone to hell and is not worth exploring. Some days it might feel like that, but there's a lot of cool R&D work happening around improved sidechain designs. Teams like Cetera and Alpine Labs are looking to develop rollups on top of Bitcoin. A lot of great work is being driven from the BitVM community and the ZeroSync team on improving two-way peg designs and developing a snark verifier that works today. This work is also inspiring a number of bridging proposals from various roll-up and sidechain projects. So, anyway, it's an interesting article. Of course, I link every time there's a link in the bullet point, if I do have a link for you guys. But that's it for this week's report. Let me go to the comments and see if there's anything going on over here. Your Bitcoin charts all look bullish. Oh, thanks. Thanks for the compliment. Yeah, Tone Vase is great. I watch him every time it comes up in my recommended on YouTube or whatever. I watch Tone Vase, but I probably only get him about once or twice a month nowadays. But he's good people. I've known him for a long time. I'm not like super personally or anything. I've met him in person once, and I've been on streams with him, and I interviewed him for FedWatch, so I kind of know him. But he's a good guy. I don't think he's ever sold a scam either that I know of. So quality podcaster. Okay, Dex Invictus. All right, thank you guys. Let me go check Telegram and see if you guys are talking about anything over here. Still nothing from Telegram. All right. Well, I'm going to end it for today, guys. Don't forget to bitcoinandmarkets.com. If you are not signed up for the free weekly newsletter, go sign up. You don't get any spam or anything like that. And if you guys are watching on Twitter, you guys can check out my YouTube. It's BTC Market Update is the channel. And on Rumble, Bitcoin and Markets. You should be able to find those links in my pinned tweet. So, all right, guys. Thanks for joining. See you on next one.